Hey everybody, Rob Maurer here, and of course today we're going to spend a little bit of time on what's going on with Russia and the Ukraine, but we've also got some really exciting news out of China, two news items on the SEC and Tesla, a report on Giga Texas, some very insightful comments from Ford CEO Jim Farley, and a couple other things as well. All right, so obviously since we last spoke, Russia has escalated things in the Ukraine more aggressively than the widespread expectation seemed to be, with military action, explosions throughout the country, including in the capital, not just isolating in the eastern region, which some had expected at least at this point. So it goes without saying this is affecting a lot of people. Certainly we have listeners in the area, and I'm sure even more in terms of family members and things like that. Certainly my thoughts are with those people, and hopefully everybody is staying safe and things de-escalate soon. So that's first and foremost. That being said, we do still have to analyze this from an economic perspective as well. Obviously the markets today, quite the roller coaster. Tesla touched $700 a share this morning and then ended up closing just above $800, up 4.8% on the day. Similar with the NASDAQ, starting off pretty far in the red and then recovering throughout the day, finishing up 3.3%, which is a lot for the NASDAQ. I'm sure many of you have seen this by now. It's been out for a few days on Twitter, but somebody did share a bit of an analysis on previous invasions and their effect on the stock market. And in many cases, it ends up being sort of a low point when that invasion does happen. That very much may have been in play with what we saw going on this morning. That can end up being the peak of uncertainty, the peak of fear. How is everybody going to react to that initially? Once those initial reactions occur, some of that uncertainty is removed and things can progress forward. What that does not mean though, and what hindsight isn't necessarily going to tell us, is if there's going to be another event that causes that uncertainty to creep back in or even suddenly come back in, there are certainly no guarantees of that being a bottom. Now, my speculation for what happened today, and I'm certainly not a geopolitical expert or anything like that, and I would welcome everybody's comments on this for sure. My speculation, in addition to the uncertainty angle, is that I would say so far the international reaction has not been with extreme force. So far, what we have kind of seen is military repositioning, sanctions, which Russia definitely would have been expecting, but so far it seems that most of those sanctions have been on finance and banking. I'm not seeing a whole lot on trade other than the Nord Stream pipeline, but that's kind of been in the news for the last few days as well anyway. So my best guess, and again, I'd love to hear yours, is that these sanctions are maybe not as severe as what the fear early this morning could have been. So when we think about Russia, they export a lot of materials. When it comes to Tesla, there are a lot of important materials there. Aluminum, nickel, cobalt. Russia's a top 3 exporter for all of those materials. Aluminum today spiked to a record high, nickel to a decade high. Sanctions and trade disruption, that represents an additional supply chain risk on top of already an obviously challenging supply chain. Now, tough to know how reliant Tesla is on Russia's portion of the supply chain, and in terms of pricing, Tesla's going to have long-term contracts in many cases, but there is at least some potential for disruption there depending on how this ends up unfolding. That's certainly not unique to Tesla. Others are going to have different levels of risk. For example, Volkswagen, Renault, Stellantis, they all have assembly plants in Russia. So overall, a lot of uncertainty, a lot of potential for disruption. I remain confident in Tesla. I'm not selling anything. We'll see what happens. Obviously, this is a situation that's changing hour by hour, so I'll try to cover any major developments, but by the time I publish, things may be out of date anyway, so we're not going to go into extreme levels of detail, even though this is going to continue to be heavily influential on Tesla's stock at least. All right, getting into Tesla-specific news, we'll start off in China. We do have a pretty exciting update here, probably not the most exciting time for this to be reported on, but Reuters today exclusively reporting that, quote, Tesla plans to start work on a new plant in Shanghai as soon as next month as part of a plan to more than double production capacity in China to meet growing demand for its cars in the country and export markets. Two people familiar with the matter said, end quote. They also say that once this new plant is fully operational, Tesla will have the capacity to produce up to 2 million cars per year at its expanded Shanghai facility. So, sounds to me like this is essentially Tesla's next Gigafactory if this report is correct. Obviously, we'll have to wait and see on that, but we know Tesla's looking at locations. We know that Elon has been very complimentary of how the process has unfolded in Shanghai, and it's hard to argue with how the results have come through. It's definitely been a stark contrast with Berlin. Now, if this is really a new Gigafactory or if it's just an expansion of Giga Shanghai, a little bit semantical, I think. The most important thing would be significant capacity expansion. And this would be on top of the already occurring expansion within the current factory, as we have talked about. That should be done by April, last we heard. Reuters here actually commenting on that as well, saying, quote, Tesla has projected to take its weekly production to about 22,000 vehicles at the plant in the coming months, one of the sources said, end quote. So depending on downtime, that's probably in the ballpark of 1 million to 1.1 million vehicles per year. That should seem like a relatively familiar number. We've talked about the ballpark capacity being around that for quite some time. We already know that in January, Tesla did about 68,000 vehicles produced. That would annualize to just over 800,000. My guess is there's a little bit more room to go on that. And then there is that expansion, which again should be April. So a lot to be excited about there for China, because we do have this rumor of this second factory or expansion or whatever it ends up being. If that does actually start next month, I thought it'd be helpful to look back on how Giga Shanghai the first time around ramped up after breaking ground. That happened back in January of 2019. Less than a year after that, which I feel like we sometimes forget about now with Berlin and Texas, less than a year after that, Tesla had produced its first few hundred vehicles. About a year after that, in Q1 of 2020, they were already kind of hitting volume production, about 15,000 in that first quarter. And less than a year after starting production, Q4 2020, they did over 65,000. So if Tesla were to actually break ground on an expansion next month, like Reuters is reporting here, and they were able to replicate that ramp, which theoretically they should be able to do, though who knows, maybe they'll incorporate 4680s there and that could cause a slower ramp. But looking at what has been done before, you could basically just add a 3 to those numbers down on the x-axis. It'd be a couple months time shifted, but that's basically what you'd be looking at. So maybe no production Q4 2022, but getting into Q1 2023, and especially Q4 2023, you'd have pretty significant production from this facility. And again, depending on what Tesla plans to build there, I think there's a pretty strong argument that it could be expected to ramp up even more quickly. Basically, strong confirmation here that Tesla's not stopping at 500,000 from Giga Shanghai. We already know that. That's what people thought originally. They're not stopping at 1 million. Scratch those numbers out, and it looks like we can pencil in 2 million for now. All right, next we've got a couple of reports on Giga Texas and Giga Berlin. Unfortunately, I do think one of these has caused some confusion. Teslarati was out with an article today with the headline of Tesla Model Y from Giga Texas is just one EPA approval away from first deliveries. So it's an exciting headline. Teslarati got statements from the EPA, and the combination of these two kind of makes it seem like the EPA somehow said, yep, we are the last remaining step for Tesla. We are all they need. But in short, the reality of this article is that Teslarati reached out to the EPA, and the EPA confirmed their general practices with Teslarati. They didn't really give them any information on the Giga Texas Model Y specifically. The article then pieces together some other information. Ultimately, I found that to be just adding confusion. So I want to stay out of those weeds and just focus on that main point. Teslarati says Tesla will be able to begin delivering units of its Austin-made Model Y all-electric crossover from Gigafactory, Texas, following the EPA approval of the vehicle, the agency told Teslarati. So nothing really unexpected there. Every vehicle needs that approval. Teslarati here, I believe, confirmed with the EPA that the new Model Y does not yet have that. What's needed from the EPA is a certificate of conformity, and Teslarati says that Tesla does not have that yet. I don't know if they confirmed that with the EPA. That does seem to be what's implied, but either way, I think generally that would have been the expectation. The EPA told Teslarati that they decide if a manufacturer needs a new certificate of conformity for a model that would already have one, in this case, the Model Y, which would have one for Fremont, on a case-by-case basis. With Elon Musk basically calling the Texas Model Y a new Model Y, presumably this would be one of those cases. Again, though, I'm not entirely sure the EPA even commented on that because Teslarati writes that, quote, the EPA confirmed to us that it could not comment on the status of pre-production vehicles that are pending new emissions certification until manufacturers introduce them into commerce, end quote. So altogether, what it sounds to me like the EPA actually said is that, yes, every vehicle model needs this certification. If there's a significant change to a model outside of the model year turnover, then we decide that on a case-by-case basis, and we can't comment on Tesla. That's good information to have. But again, I feel like the headline suggests that the EPA somehow said that they're the final checkmark, implying that Tesla's done everything else they need. And I don't think there is any information indicating that here. EPA is just saying, yep, you need to do this before you can sell cars. As for Berlin, we've got a rumor here from Sawyer Merritt that says that Tesla has now produced over 1,000 Model Ys at Giga Berlin. There's also a photo of VIN number 1,000. That's not really proof in and of itself. Tesla could obviously skip VINs. Sawyer did say in another comment, though, that that was not the only confirmation. From drone flyover videos, we've now seen vehicles in the hundreds level, so this would definitely seem plausible. Remember, right now, Tesla has temporary permission to produce up to 2,000 additional vehicles. I can't remember if that's in addition to the first 300. I think that it is, so max 2,300 total if I am remembering those numbers correctly. So if and when final approval does come, Tesla should be ready to ramp very quickly, but remember, they are still facing supply constraints. Shanghai and Fremont, Tesla has said, we're running below capacity, so gotta kind of keep our expectations a little bit in check for that reason as well. All right, next up here, we've got our Tesla daily update on Tesla and the SEC. we've got a response from the court to Tesla's original letter on February 17th and the SEC's reply to that letter on the 18th. And it is not favorable for Tesla. So the court says that they received those letters. The defendant's precise application to the court is unclear, they write, and the court denies this request for a conference. On Tesla's complaints about the $40 million not being redistributed yet, the court says that to the extent that the defendants seek to impose a deadline on the commission's implementation of a plan of distribution for the fair fund, the defendants may file a motion and submit a briefing in support of doing so. So I guess not really a no, but the court not going to do anything about it unless there's further action from Tesla. As for the back and forth on subpoenas and whether or not the SEC was targeting Tesla, the court writes, quote, further, to the extent that the defendants have a non-frivolous basis to quash a subpoena in light of the court's prior orders in this case, the defendants may make a motion, supported by briefing, that requests specific relief from the court, end quote. So again, not really a no, but the court needing quite a bit more information on that. And then finally, in regard to the accusation of the SEC leaking information and Tesla's coinciding request for on-the-record assurance that the commission has not leaked investigative details in violation of its own policies and rules, the court writes that the letter does not contain specific facts or legal authority to justify this request. Moreover, the court doubts that the regulations invoked by the defendants are judicially enforceable against the commission. They cite a different case ruling that had said that the discretion possessed by the agency in determining whether to disclose information was a privilege of the agency and not the witness. So in this case, the court not really seeming to want much to do with that, basically leaving disclosure up to the SEC. Now, if someone did leak information and Tesla had evidence of that, I think that'd be a different story, but so far Tesla has not presented that. The court's not going to force the SEC to make some statement just at Tesla's request with no evidence. So kind of 0 for 3 there for Tesla, but obviously the opportunity to follow up. The other news on the SEC, the Wall Street Journal reporting on this today, is that the SEC is reportedly investigating whether recent stock sales by Elon Musk and Kimball Musk violated insider trading rules, they cite, according to people familiar with the matter. In question here would be Kimball Musk's stock sale on November 5th. That was one day prior to Elon Musk tweeting his poll about potentially selling 10% of his Tesla shares. So I think it's tough to make a case that that should not be investigated. The timing there, awfully coincidental. I looked back and I thought that the Kimball sale was pre-planned. It actually was not. Oftentimes these have a 10b5-1 trading plan. Those are planned weeks and months in advance. This did not have that. So honestly, strange move, and seems obviously like something the SEC would investigate for such high-profile individuals. If they were going to be insider trading, you would think that they would think to do something a little bit less blatantly obvious. So hopefully that in and of itself is kind of a sign that there's really nothing wrong here. I mean, obviously, Elon aware that he's got a target on his back from the SEC to do some insider trading for Kimball's stock sale of $100 million, which is, yeah, a lot of money, but relatively for the Musks, not all that much. That whole situation would seem quite silly to the degree that it seems to become unlikely. But again, also makes complete sense that the SEC would want to investigate that and confirm that because of the relationship, the timing, and the not pre-planned aspect of the sale. I mean, avoiding this is exactly why those 10b5-1 plans exist. So we'll see what comes of that. All right, next up, we've got some pretty interesting comments from Jim Farley, Ford's CEO. He had a discussion with Wolf Research, and they talked quite a bit about Tesla. And some of the comments here you kind of just have to chuckle at because they pretty clearly spell out why Tesla has such a significant lead and why that lead is highly likely to persist. And what better person to make that case than Ford's CEO? So the first part here, which again, you just kind of have to laugh at, Farley told Wolf Research that the company could hit Tesla-like profit margins by using common electric motors, electronic components, and other parts across all sizes of vehicles. So they could do it, but to do that, Ford needs radically different human talent than it now has, Farley said in a surprisingly candid interview with analyst Rod Lachey. He also said that the company has too many people and too much complexity, and it doesn't have the expertise to transition to battery electric vehicles. All right, so you could totally hit Tesla's profit margins if you didn't have all of these things that are stopping you from hitting Tesla's profit margins. And furthermore, they're just talking about gross margins here. There's also fundamentally different business structures that allow Tesla to capture more operating margins, the dealership model being a hindrance there for Ford. So this list starts to get pretty long pretty quickly. And then Farley also said that they can't just pivot from internal combustion engines to battery-powered vehicles, saying, quote, I can't turn to the ICE organization and say, go be Tesla. They may do it on the body, they may do it in plant operations, but that's not good enough, end quote. So, I mean, I fully agree with what he is saying there. I think that very quickly paints a picture of Tesla having an insurmountable lead. It's obviously very good that he recognizes that. I'm not sure personally that I would be bringing more attention to those things in a public setting without the plan to also correct those things. But hey, I certainly don't mind hearing it as a Tesla investor. All right, last item here. Of course, we had talked before about NHTSA investigating Tesla over the phantom braking issues, and it looks like Tesla is not actually alone in that. Separate investigations here, of course, but NHTSA is also looking at Honda for 2018 and 2019 Honda Accords and 2017 to 2019 Honda CR-Vs for issues with unintended automatic emergency braking. Now, I'd echo all the same comments that I made for Tesla with Honda too. You got to consider that, yes, there may be false positives that cause discomfort and potentially a safety risk, but that needs to be evaluated against the dangers of changing things and having more false negatives that then end up with a collision. To be clear, I'm not saying that is the case for Honda or that's where things will head. I'm just trying to reiterate that regardless of the automaker, that is something that I feel like should be considered and I hope NHTSA does consider. All right, that is where we'll leave it for today then. As always, thank you for listening. Make sure you're subscribed and signed up for notifications. You can also find me on Twitter at Tesla Podcast, and we'll see you tomorrow for the Friday, February 25th episode of Tesla Daily. Thank you.